Yo, what's up strategists? Welcome to the Bitcoin Strategy. In this video, I'll be talking about Bitcoin's steady rise to the top against the crypto market fueled by Wall Street, Bitcoin-only treasury operations, and Bitcoin-friendly policies that target Bitcoin and Bitcoin only, and why altcoin season may be canceled this year or be canceled forever. Now, please note, Bitcoin is not crypto and this is not financial advice. Always do your own research before entering any position. Now, let's get into it. Bitcoin's dominance is on the rise. Now, as seen in the chart in the introductions, Bitcoin dominance currently sits at 65%. It is currently on the rise, as we can see here. This represents Bitcoin's dominance among everything in the digital assets market, like your Ethereum, your XRP. Now, if we pull up the chart, I have indicated some points on the charts that led to this huge rise in Bitcoin's dominance. So point one being the bank failures in March of 2023. So if any of you remember, back 2 years ago, 3 banks collapsed and Bitcoin just pumped like crazy. Those being Silvergate, Silicon Valley Bank, and Signature Bank. That really marked Bitcoin as one of the safe haven assets, like among gold, among really pretty much just gold, as a way to hedge against inflation and hedge against bank failures. Now, around January of 2024, Bitcoin spot ETFs were approved, and those led on to be one of the most successful ETF launches in ETF history. Now, if we point those exact same points on the Ethereum dominance chart, it does not look pretty. As we can see here, this is when Bitcoin's dominant rally started, and Ethereum has pretty much just gone to the downside. These are when the 3 banks collapsed. Ethereum pretty much didn't go anywhere and then went down. These are when the Ethereum ETFs were approved, and they were not as a successful launch as Bitcoin's. It rallied up, so they bought the hype, and then it just crashed like a month later, and now we're all the way down here. Now, unlike previous runs in Bitcoin dominance rises more gradually instead of making sharp moves to the upside or downside like it has done in the past. This could indicate that one, market participants finally understand Bitcoin. Bitcoin is now less of a speculative asset. Number 3, people are slowly dumping the crypto for Bitcoin. And 4, Bitcoin cycles are over and we could be entering something called the super cycle. Now, if you don't know what the Bitcoin 4-year cycles are, let me just show you right here. So each of these bars represent a halving. So halving 1, halving 2, halving 3, and halving 4. Now, before the first halving bar, 50 Bitcoins were released every 10 minutes. After the first halving, which this represents 4 years, this is 4 years. So between each bar is 4 years. So after the first halving, which we can see right here, Bitcoin's supply issuance was cut in half. That's why it's called the halving. And 25 Bitcoins were released every 10 minutes. So we went from 50 Bitcoin here to 25 Bitcoin after the first halving. After the second halving, it gets cut in half again to 12.5. And after this one, it goes to 6.25 and so on and so on. Now, if Bitcoin 4-year cycles are finally over, we could see a super cycle that capitalizes on Bitcoin, leaving its early, hardly understood speculative phase into its older, more understood phase. Now, on to Wall Street doesn't want your tokens. On January 11, 2024, the first Bitcoin spot ETFs were available to trade, with BlackRock's IBIT being the most notable one. Since then, IBIT has been the most successful ETF launch on the stock market to date, rounding up a $34.5 billion AUM in its first 10 months. On the other hand, ETH, BlackRock's Ethereum version of the ETF, had a mediocre launch, accruing only an ATM or AUM, too much strategy, AUM of only $2 billion in its first 10 months. This makes BlackRock's IBIT 17 times larger than their Ethereum ETF in the first 10 months, while Bitcoin is only 8 times bigger in terms of market cap against Ethereum. This shows that Wall Street investors are doubly as more favorable to true hard money, which is Bitcoin, over software projects like Ethereum that happen to have illegal tickers up for trade. Now, onto the strategic Bitcoin treasuries. More recently, many companies globally have taken interest in the Bitcoin treasury strategy pioneered by Michael Saylor and MicroStrategy that works so well. This led to significant institutional demand for Bitcoin among corporations that follow MicroStrategy's playbook. As we can see here, this is a great website, Bitcoin Treasuries. All of these companies right here hold Bitcoin. All of these companies, we have some private companies too, some governments, and these are ETFs. But all of these companies, I would say like 75% of these companies weren't here before 2025 and before Michael Saylor really showed how well his strategy worked. And the best thing about Saylor's playbook or MicroStrategy's playbook is the 20th rule of Bitcoin, according to Saylor. The 20th rule, you do not sell your Bitcoin. Pairing this with Bitcoin's cap supply, this makes Bitcoin the most scarcest asset in the world, held by relentless holders that won't sell no matter what. Now let's look at crypto. It's filled with projects that change their vision every year, Ethereum. It's filled with a community that will jump ships, jump to different coins at the slightest turn of a key, like people going from Ethereum to Solana. Most coins don't have predictable growth or supply, nor a censorship resistant protocol that everyone can use globally, and so on and so on. In short, there is nothing strategic about holding crypto. If you want to see an example of a company that's following Strategy's playbook to a T, make sure to check out my video on 21 Capital. The link will be in the description. Now on to Bitcoiner policies to rule them all. One way to solidify your position in any market is to expand your roots into the soil of government. Beginning in 2025, Bitcoin bills and policies have roared throughout various branches of government, globally, federally, and locally within states and jurisdictions. Now let's look at one of those bills that were signed. This is from New Hampshire. New Hampshire signed a bill that will allow them to start buying Bitcoin. This was released, I believe, May 6th. So after 60 days, this bill will take effect and they can buy Bitcoin and put it in their treasury. Now, another example was from earlier this year. This was at the federal level of the United States. I made a video on this if you want to check that out too. It's on United States establishing a strategic Bitcoin reserve and a crypto stockpile. Now, these are two different things, but notice how the Bitcoin reserve and the crypto stuff is separated. That's what we want. Bitcoin is now recognized as an asset that should be separated from the rest of the market, which is good. Now, in short, Bitcoin-focused policies, treasuries, and relentless institutional demand for Bitcoin is here, and it's ready to show the crypto market who the real winner is in this digital assets game. In the future, you can expect to see a massive divergence between Bitcoin and crypto, as we're already seeing with Bitcoin and Ethereum. As we can see here, the first time Bitcoin hits $100,000, Ethereum is at 4K. Second time Bitcoin hits 100,000, Ethereum 3.9K. Third time Ethereum is 3.7. Fifth time Ethereum's at 3K. And the most recent, which is as up to date, May 10th, 2025, Bitcoin hits 100,000 and Ethereum is at 2K. Now, we might even be able to buy goods sooner or later with our Bitcoin, as we can see from this tweet from Steak and Shake or Steak and Shake. They will be accepting Bitcoin on May 16th, so make sure to check them out too. Show them some love. Now, don't wait. Get on the winning team. Get Bitcoin. If you enjoyed this content, feel free to like, comment, or even subscribe. It's very much appreciated. And as always, stay orange pilling, stack sats, and have a great rest of your day.